SG&A, Selling, General and Administrative Expenses. What are they? What is the right level of spending on SG&A? How much do world-class companies spend on SG&A, and how have those companies been able to drive significant cost reductions? Find out in this Finance Storyteller video. SG&A is a financial term used in the income statement. Like many other financial terms, it has been in use for a very long time. In the olden days, companies would be structured like this: a manufacturing plant, a fence, on the other side of the fence an office where the general manager, salespeople, marketing team, customer service, human resources, finance, legal and IT are located, and finally a lab where the research and development team is working. Manufacturing costs eventually end up in the P&L as cost of goods sold, and most of the cost of the people on the other side of the fence go into SG&A, except for R&D, which tends to get reported as a separate line item. If you are working in an industry like services or software, your company probably has a term cost of services sold or cost of revenue on the left, replacing the cost of goods sold that a manufacturing-based company would use. The idea of SG&A stays the same though. It's the cost of support functions like sales, marketing, HR, finance, etc. In order for you to get a feeling for the numbers, I would like you to answer the following question. Which of the following companies has the highest SG&A as percentage of sales? Would that be A. Boeing, a company that manufactures airplanes; B. GE, General Electric, a digital industrial company active in fields like power generation, aviation and healthcare; C. LVMH, well known for brands like Louis Vuitton, Christian Dior and Tag Heuer; or D. Tesla, the electric car company? Think about that for a minute, make a note to yourself on what you think the correct answer is, and let's see how these companies are doing on SG&A when we go through this video. By the way, this video is for educational purposes. None of the comments about any of the companies in this video should be interpreted as investment advice. Let's go through some numbers to benchmark SG&A spending. I'm very grateful to the DuPont Corporation for publishing an SG&A benchmark overview in one of their shareholder updates. It provides some great reference points to start with. The median SG&A spending in the peer group of DuPont was 18.5%, which on the left 3 outliers in terms of high spending: Johnson & Johnson, a pharmaceutical company; Procter & Gamble, a consumer goods company; and Merck, a pharmaceutical company. Why is their SG&A so high? Pharmaceutical companies spend a lot of SG&A dollars on compliance and regulatory affairs, and both pharma and consumer goods companies spend very significantly in marketing and advertising. On the other extreme is a company with the lowest SG&A spending out of the 18 companies on this overview: airplane builder Boeing, which relative to other companies doesn't seem to have a big back office compared to the sales revenue that they generate. It's great to benchmark SG&A spending to figure out your relative position as a company, but even more interesting to see what the opportunity is for reduction and learn how companies have achieved this reduction. Let's look at GE, a company that went from that median level of 18.5% back in 2011 to 14% in 2014. That's 4.5 percentage points in 3 years. Judging by the latest earnings release, GE didn't quite get to the very ambitious level of 12% SG&A as percent of revenue by 2016, but if you are impressed by cost reduction performance, then this is impressive progress nonetheless. GE is very open about how they achieved their SG&A reduction. In the May 2015 EPG conference slides, GE CEO Jeff Immelt mentioned as the key drivers reducing headquarter costs, footprint reduction, shared services, ERP, IT systems reduction and consolidation, and FastWorks, a shift in thinking to improve speed and simplification. I can add 2 more items to this picture. GE has made big steps to integrate systems and processes of companies that they have acquired over the years, and GE has changed from a model with a lot of P&Ls, where every business leader had its own management team, to a more centralized model where functions like finance, IT and HR support multiple P&Ls. So should you go out and relentlessly pursue top-down SG&A reduction for your company? Before you take any rash decisions, inform yourself. Have a conversation with people from all parts of the business and get a good understanding of how each functional area adds value to the business. Organize responsibilities, tasks and projects around the passion and talent of your employees and get them to flourish. It improves job satisfaction as well as the bottom line. A word of caution for companies that reduce SG&A too fast. Make sure you have properly identified any compliance risks. The fine for incorrect statutory filings or non-compliance with labor regulations might be higher than the savings you make when reducing headcount in finance or HR. Let's zoom out to the big picture and look at the equation of SG&A as a percentage of revenue. Most people think about this only in one dimension, reducing the SG&A spend, thereby reducing the amount in the numerator of the equation, hence the spend as percentage of revenue goes down. A very healthy alternative is to grow revenue quicker than growing SG&A. You get the benefit of the extra gross margin from the extra revenue, and when SG&A is not growing as fast as revenue, then your operating margin could grow even faster than revenue due to operating leverage. Tesla is a good example of this healthy alternative. In the first 3 quarters of 2016, they grew revenue by 67% and SG&A by 54%, improving the ratio of SG&A spend as percentage of revenue. At 21%, Tesla's SG&A as percentage of revenue is far higher than that of GM or Ford, who are in the 8 to 10% range. This is where the relative comparison in percentage makes little sense. You are comparing mature and established companies like GM and Ford with an annual absolute spend in SG&A of $12 to $14 billion to a company like Tesla that is at a very early stage of its growth curve and in absolute terms only spends $1 billion. It is very likely for your SG&A percentage to be higher when you are ramping up your business. Let's zoom out even more and look at your company's strategy. There are many different strategies and strategy models that can make you successful. One of them, from an influential book called The Discipline of Market Leaders, is customer intimacy. If you want to offer the best total solution to your customers and be very responsive, you might have to spend more in SG&A rather than less. Here's an example of a company where brand and customer experience are central to who they are. LVMH. They spend €16.5 billion per year on marketing, selling, general and administrative expenses. That's a whopping 46% of revenue. LVMH has a very healthy operating profit and net profit, as the SG&A spend is easily covered by a gross margin of 65%. If you embark on your own benchmarking of SG&A spending for your industry, please check the definitions of what it is and what is not included in that line item to make sure you have comparisons on an apple-to-apple basis. As an example, let's look at the Verizon Communications 2016 numbers. First of all, Verizon puts all depreciation and amortization expenses in one line item, rather than splitting out depreciation and amortization in each of the functional expense lines, which might skew the comparison. Second, do you notice the strange pattern in SG&A from 2014 on the left to 2016 on the right? A spend of 41 billion dropping to 30 and then going up to 32, while revenue does not change as dramatically. Before you draw any conclusions on Verizon's SG&A number as percentage of revenue, it would be advisable to dive into their overview of non-operational and other items by year to identify any unusual or one-off items that may have caused SG&A to be higher or lower than usual in certain years. In summary, the level of SG&A or selling, general and administrative expenses depends on your strategy and varies by industry and by company. There is no single right level. Decide what you want to achieve as a company and then align the spending level accordingly. I hope this was helpful. Please get in touch if I can help you in SG&A or other finance topics. On the Finance Storyteller YouTube channel, you can find lots of well-researched videos explaining business, finance and accounting topics. Please subscribe to the Finance Storyteller channel and take the time to like the video and comment below. On average, I post one new video per week. If you subscribe to the channel, you will be the first to see it.